Assalamualaikum. We are from Group 4. We'll be present about moral and ethical issues in credit assessment profession. This is our group members. Credit officers play an important function in society. They are in a unique position of trust in their relationship with their clients, employers, and the general public. They are responsible for ensuring that their responsibilities are carried out in accordance with the ethical standard of sincerity. Credit officers are required to maintain a degree of professional ethics that exceeds the law of society. This report consists of three main objectives, which is first to analyze the moral and ethical issues in the credit assessment profession. Second, to determine the factors that contribute to the moral and ethical issues in the credit assessment profession. Third is to identify how to overcome the moral and ethical issue in the credit assessment profession.
Based on what have been studied from the research that has been done, the credit usage becomes important for the people because it is one of the ways to meet the need when to do the transaction or payment. The use of this credit becomes an alternative for customer to purchase a requirement in large amounts and can be later as agreed in the mutual agreement between the bank and the customer. Then, to establish a binding agreement to approve the term of the use of the credit, it is the responsibility of the credit officer where it requires a proper form of moral and ethics so that something suspicious does not occur during the credit approval process. This credit assessment also be one of the credit profession because it's made to make credit analysis that aims to evaluate the risk of the debt instrument issued by any financial institution to measure the entity's ability to meet its obligation. The analysis that need to be made also require a transparent ethical and moral attitude so that there is no form of fraud and customer selection such as based on rank, gender and qualifications. They need to be ethical and cultivate a moral attitude in all matters of work as well as outside of the work. Morality strongly emphasizes the principle of right and wrong, while in ethical terms, it focuses on the right and wrong behavior of an individual according to the particular situation. The link between moral and ethics with the credit assessment of the profession is that it is very important to apply, as it is capable of having a negative impact if not done properly, as it affects the financial institution, banking and economy of the country. Impact that can be happened that already stated by the commentators are that caused by moral deficiencies such as unrealistic and risky mortgage loans to poor residents, packaging and selling of this loan in a way that discuss the real risk, unreliable rating by specialists, risky investment policies often driven by an exorbitant bonus culture of top management. Also, credit scoring be the one that involved in the process of credit assessment. It will also need to be transparent and accuracy from the assessment of credit officer or credit profession. According to the history of credit scoring, credit score model was created by Fair Isaac Corporation or FICO, and it is used by financial institutions. FICO was not only credit scoring system, but FICO scores are the most commonly used in financial institutions.
In the brief terms, research methodology is outlined as a method involving with identifying, selecting, and analyzing the details on a certain subject matter. In this paper, we adopted a research design which is called explanatory research design. It is a method to discover an obstacle that had never been studied previously or that hasn't ever been studied properly. The study adopted a qualitative research approach to get a deeper understanding of the moral and ethical issues in the credit assessment profession. The qualitative research methods that are being used in this study are case study research and record keeping. The main reference for this study is secondary sources like articles, journals, newspapers, related websites, lecture notes, YouTube, and others.
Next, I will present about moral and ethical issue in credit assessment professions. The first issue is to not meet social needs. The credit officer is very strict when it comes from the customers who have lower income background or small business operations. Therefore, the moral and ethical issue arise when the credit officer approves the loan application made by the individual with good credit worthiness who is less affected if the loan is not approved, but declines the loan application made by the customers with medium financial background who really needs the loan. This practice had raised questions regarding the real purpose of establishing a financial institution as the one of the institution with high social responsibility, with the objective to help people to get the financial support. The second moral and ethical issue is misuse borrowers' personal information. In order to make a loan application, the customer has to disclose their financial data to the bank for the credit assessment process. However, the moral and ethical issue arose when the credit analyst had misused the applicant data to help the sales teams to find potential new customers. Therefore, their main target is surely the one who has high credit worthiness, where these customers might be contacted again by the bank to offer other services such as taking other loans at their bank. It is clearly an unethical manner to invade customer privacy. It also totally immoral and unethical behavior to dispose customers' personal information, as it should be private and confidential. The third moral and ethical issue is giving loan to someone that do not deserve. This issue happened not because the banks are flexible in giving the loan, but because of the credit officer just approving the loan application without going through the whole credit assessment process. Therefore, when the credit officer skips one of the steps of credit assessment process, they might end up choosing the wrong applicant to get the loan. There is also an issue where the credit officers manipulate the application's credit history to be a good one in order to ensure they will pass in the credit assessment process. The last issue is lack of transparency, when the credit officer did not explain to the loan applicant on why their loan application was rejected. The customer has the right to be disclosed with the data process. This is because the customer has to know whether their data has been accessed accurately. In addition, if the customers do not know how their credit score has been calculated and evaluated, the credit officer may tend to manipulate their credit scoring. Therefore, the fairness in credit reporting can be questionable. The credit officer should disclose the customer's data process not only to ensure fairness but also to help them to improve their credit history in the future.
The first impact of moral and ethical issues in the credit assessment profession is financial institution and the credit officer probably facing a bad reputation. A credit officer who takes such an oath and receives ethics training may be more likely to evaluate the influence of their action on society. For example, giving credit loans to people who are not eligible. This situation will lead to a bad reputation of the financial institution due to dishonesty in assessing a person's eligibility to receive a credit loan. The second impact of moral and ethical issues in the credit assessment profession is financial institutions will be facing the financial crisis. A credit officer must be someone who thinks critically in making decisions in determining a person's eligibility before getting a credit loan according with the rules and laws set by the financial institution. The global financial crisis of 2008 happened in the United States when subprime mortgages were extended to high-risk homeowners, ignoring the obvious hazards of lending money to a population prone to default on notes with adjustable growing interest rates.
There are 4 factors of moral and ethical issues in credit assessment profession. First of all, lack of regulation. Lack of regulation is the failure and inability to control the financial market's non-regulation. In my opinion, each bank needs an observation from a supervisor to avoid any fraud or crime during the credit assessment process. This is because cases like taking bribes, forcing a document, or corruption can happen if there is no supervision, and it will give the bank a bad reputation. Next is bribery. Bribery is offering any kind of item either in cash, service or gift to influence the action of any individual in a legal duty. Usually, customers do the bribe because they acknowledge that they got a low chance of their loan approval. This will give an impact towards bank because bank will face legal action under the bribery case and bankruptcy because they lend the money to wrong and undeserved people. Third factor is pressure from the employers. pressure from the employer is usually because the employee's performance in reaching the target which influence people to take loans from their company. Employees are stressed over reaching the customer target given by the employers. So, they will approve any loan application without doing some research about their client's background. And because of the pressure from the employers, bank employees might do something ridiculous such as forcing documentation, take a bribe, or take a credit assessment profession lightly. Lastly, internal behavior. Internal behaviors occur when people have trouble coping with negative emotions or stressful events, so they channel their feelings within. Internal behavior among employees is caused by work culture, job responsibilities, and because of the pressure from the employers. Internal behavior such as pressure in the workplace will make them stress out and lead to a mistake during analyze their customer's background in loan application.
The first way to overcome moral and ethical issues in credit assessment is effective implementation of Human Resource Policy and Procedures (HRPP) and Code of Ethics. HRPP is the document contains all the details on the treatment that should be given to the employees in the organization and help the employees in gaining an efficient understanding of the organization culture. Within the organization, it is necessary to ensure that the employees perform their duties in accordance with the rules, policies, and standards that should be recognized in the work environment. Meanwhile, the Code of Ethics is a set of principles that guide the organization in its program, policies, and decisions for a business. A Code of Ethics reaffirms the organization belief and morals so that the workers and the third parties understand the standard to which they are held responsible. Therefore, the policy can combine the code of conduct and ethical behavior of the bank employees, including credit assessment. In addition, all issues relating to staffing, program operation, and organization support must be stated in a concise, accurate, and understandable manner so that the employees can understand the true meaning of the policy. Next, provide need-based training on stress management and competency as well as initiate mentoring program. Bank executives should establish appropriate financial and non-financial budget to pay for credit assessment officer training on various topics such as established competency, dealing with clients, time management, stress management, and other soft skills. Workplace stress management programs educate employees on recognizing indicators of stress and other mental health disorders in the workplace. It also equips them with the knowledge and abilities needed to provide assistance when an employee is under stress. Next, mentoring is also another essential issue specific to all staff, especially new staff, to get a proper guidance and advice. Mentoring is a learning process where helpful personnel and reciprocal relationships are built while focusing on achievement and emotional support. Because of that, mentoring programs serve to improve personnel and professional development as well as onboarding and productivity. Last, enhance a better communication. Communication is a process both producing and ascribing meaning. It is interaction and sharing of ideas among group members. Therefore, excellent and effective workplace communication is crucial to an organization and critical to the company's success. Then, the ability to communicate effectively at work may improve overall productivity and build a strong team. Thus, bank manager may ensure that strategy choices are communicated effectively by organizing meeting and field operation visit, establish an atmosphere in which credit assessment officer may ask a question regarding the problems they encounter while doing their duties, and regularly reschedule feedback season for credit assessment on their action and performance.
To be concluded, the employee and employee themselves should be aware of the importance of adapting moral and ethical behavior in the workplace, especially while contacting with their customers or clients. From an Islamic perspective, the goal of a business is not only maximization of its wealth, but also to comply with Sharia principle. By having an ethical and moral credit officer, the process of credit assessment can be conducted fairly. Moreover, it can help to assist each customer while maintaining its reputation. Credit assessment is a transaction that involved with debt. It will not only affect two parties, which are bank and loan applicant, but it will affect the whole economy too.